Professor Prescott, thank you for joining us today. What is your judgment of Europe's handling of the debt crisis so far? What has it gotten right and what has it gotten wrong?
There's the need for some fundamental reform. Just cutting the deficits will not be sufficient. There's a problem of the need to increase places for people to save and get a decent return. That's the root of the problem.
Do you think we'll see a default in Greece or in Ireland or Portugal?
Partial. In fact, yes, but maybe not in name.
Define partial default.
They get subsidized loans through the European Central Bank would be subsidy and partial default. And the people paying that are the big claimants against those funds, who are probably the German and the French.
Once again, there's speculation that the euro may not survive in its present form. Do you think that Greece should and will stay in the euro?
I think they should stay in the euro, and I think they probably will. States that in the United States that behave like Greece stay in the United States, which uses that common currency, which is quite convenient. So I think it just facilitates international investments in Greece, and Greece will benefit a lot from them.
Shifting the focus over to the U.S., you've argued in the past that U.S. debt is not necessarily a bad thing, that the U.S. may actually need higher debt to accommodate an aging population. Is that still your view?
No. That if governments could commit to honor their promises, it would be my view. But they can't. They can't. Inevitably, there's default in hidden ways. Maybe unanticipated inflation, maybe starting taxing the income heavily, etc. Or wealth taxes. The government can figure out a way.
Now this brings us to the saber rattling between President Obama and the Congress over the debt limit. How do you expect this to play out?
Well, to spend is to tax is to depress. That's a fact. Anticipation of higher future tax rates depress the economy now. There's a political game going on where, how do I expect it to play out? I suspect there will be, maybe expenditures will go up a little less, and that's a little less worse than them going up more. But I don't it just doesn't seem to be a coherent argument to increase expenditures now, which is to the debt limit. It puts a cap on them, but they'll figure out ways to get around that.
Now, what happens if there's no deal on raising the debt ceiling?
Well, during the summer, I live in Minnesota, and Minnesota had no deal. So they're shutting down the government. Maybe we can save some money. I do not expect big problems to this. They will try and cut expenditures where it does the max amount of visibility and pain to the citizen and leave the other parts there. But they could get rid of 5 or 6 of 90% of the federal government employment without causing this. Let the states handle things.
Now, the U.S. recovery is currently going through a bit of a soft patch. What's your explanation for that?
First, there's no recovery. there was a recession where the economy dropped 10% relative to trend. And over the last year and a half, it's been 10% below trend. We have not come back up, unfortunately. Now, why? People fear people are not investing, particularly in young people, learning skills. The employment rate of that group is quite low. People expect higher taxes in the future, and if you expect higher taxes in the future, you invest less now and you work less now.
What then is your outlook for the job market? The U.S. created jobs at a monthly pace of 166,000 in the first quarter. That's showing signs of easing off. Where's the job market heading?
I see things going along a lower trend. It's sort of growing due to population and people becoming more productive of nearly 3%. And that means that the employment rate, the fraction of the population employed who are 16 or older, is 58.4%. And it's been at that number for a long time. It used to be up around 62.5%, 63% prior to the recession. So I hope we don't lose a decade of growth. If they follow anti-productivity growth policies, this could happen. It happened to Japan. Brazil in the 1980s and 1990s lost 15 years of growth, which is a couple percent living standards, and it adds up over time. I hope it doesn't happen to the U.S., but it's hard. But that's a longer run thing.
So what then is the risk of a lost decade in the United States?
Maybe about 50%. It depends upon what the people say. If they say we want to, and people are not happy with the current policies. They're upset. In the last election, there was that was a big protest. People like the president, but they hate his policies. In this Medicare or Obamacare scheme is just a huge tax on young people, which is hurting them a lot, their employment. There's been some moves to, become more like Greece and Portugal with the appointments to on labor market policies. If you talk to some of the other people who will be at this event, Pissarides and Mortensen, you'll hear about that probably.
Let me then go global with one final question. China raised interest rates again today. How do you see the interest rate environment evolving globally as we get into a recovery where a growth potential, at least in the advanced countries, has been depressed by the crisis? Will rates peak at a lower level this time?
Yeah, I think the interest rates will be going up, the real interest rates. I think Europe has no choice to reform and is reforming. And growth rates have been pretty healthy. Throughout the world as a whole, there's only a couple bad areas. The United States, Italy, Portugal, Spain, and Greece. And I guess Ireland had a problem as well. But Central Europe is doing well. They're catching up. Latin America is doing well, which is good to see. And even Africa. This seems to be, there's going to be reform, and then there'll be rapid growth and rapid recovery in employment.